You know, second last day of COP today, and we're discussing the Clean Development Mechanism, which was created to allow those Annex 1 countries under the Kyoto Protocol to buy carbon credits or CERs from developing countries who are investing in low carbon clean projects. And as you say, to discuss this, I've got Martin Hession, Chair of the CDM Executive Board of the UNFCCC. Martin, thanks very much for your time on CNBC Africa today. Martin, firstly, from your perspective, has the CDM been a success so far?
Yes, I think so. Essentially, we operate in 72 countries. There are about 3,700 projects, and we have got about $140 billion in investment through the mechanism. So I think that by any means is a success.
And if we break that down in terms of where these projects are mainly hosted, where have the majority of the CDM projects been?
For the most part, they've been in the big developing countries, so China, India, Brazil, and to an extent South Africa. And that's a natural result of it being a market mechanism. Necessarily, people will chase emission reductions where they're available and cheapest.
One of the big concerns raised by big emitters like China, India, Brazil is that they aren't able to benefit from CDM projects being hosted in their country, as they obviously can't double count these carbon credits. They're having to sell these carbon credits to EU countries, Annex 1 countries. What is your view on these concerns?
Well, I think between a buyer and seller it's always going to be a mutual benefit. Plainly, there is investment from the developed world into China and India and Brazil, so that's a flow of capital, which is useful. And obviously the developed countries get the benefit because they reduce the costs of doing their emission reductions. So I would say it's a kind of a mutual relationship. Obviously those countries can talk about improving that, but under the CDM I think it's fair. I know that China, for instance, has managed to capture some of the profits from the projects in a tax, which they dedicate to sustainable development, and other countries have different policies on how they use the revenues.
As you say, and $140 billion in investment so far in CDM projects around the world. Let's look at some of the other issues that have also been raised. CDM has been viewed in a bad light as a result by some as a result of its investment in coal projects. Why is that so?
Well, obviously fossil fuel projects and any support to a fossil fuel project is controversial in the sense that fossil fuels are part of the problem. We don't incentivize fossil fuel per se. What we do is we incentivize a reduction in emissions from those projects, i.e. if the fossil fuel project is more efficient than it would otherwise be, we will give credit for that improvement in efficiency because there's a reduction in emissions. We have looked very closely at those methodologies to make sure that the emission reductions are credible and real. We have recently suspended the coal methodology, which is what's raised the controversy because we feel it can be improved.
Let's look at Africa. Slow growth in Africa with regards to CDM projects. We have seen a number of coming online in Kenya, for example. What is the likelihood that we're likely to see more CDM projects being invested in Africa, and why currently have we seen such sluggish growth here?
Okay. Well, I first of all have to say that investment levels are falling in CDM overall, so it's important that we have increased emissions targets to drive investment. That must be the first thing. I think Africa has been slow to come to the CDM. There have been necessarily difficulties. We've been perhaps more complicated and less streamlined than we should have been at the beginning, and we're making great strides to simplify approaches that are for smaller projects and for projects in less developed regions, which I think will help Africa. That said, we need to see more demand happening. I think you see the percentage of African participation in the mechanism increase over time. We have a particular program which is called a programmatic approach to CDM, where Africa has nearly 70% of the total. So if we have the appropriately tailored tools, I think Africa can take advantage. That said, it's like any ordinary investment. You need to have the infrastructure in place, and people will look at risk and the difficulty of doing business. So in some countries it's relatively difficult to do business, and some of them are in Africa. In other countries where they have a clear investment climate, you're going to get better results.
As you say, also that transparency and understanding of the market and concerns around the risks involved in these African countries. And let's focus in on the Kyoto Protocol. And if we don't have a second commitment period, what does that mean for CDM?
Well, I think it's important to say that a second commitment period is important, but the Kyoto Protocol continues, and we are one of the bodies of that protocol. We have a mandate to continue registering and registering projects and issuing credits. That doesn't finish. We've had some discussion about finishing that mandate here, but I don't think that could possibly be agreed. So we will continue. The bigger question is, as I mentioned, the need for demand. We've seen a fall in investment because targets have not been increased, and as a result, perhaps nobody wants to buy from the instrument. We're just an instrument to deliver on climate change. We don't drive the demand. So we need more demand, and I think the political outcome needs to reflect that. We've had some positive things in the sense that Australia has adopted an emissions trading scheme, and they've identified that they want about 350 million tonnes to their scheme, so that's new demand in the system, but plainly there needs to be a lot more.
Without a legally binding agreement, though, there won't be any key drive to buy carbon credits. That's what many are saying, though. And at this point in time, we don't look likely to have a global legally binding agreement.
Well, I'm always hopeful. I have to be an optimist. I think there's a debate going on. Many people prefer a bottom-up system, which I think is unfortunate, where people develop emissions trading schemes and climate policies on their own. I think that's positive, but I do think you need an international framework to measure and reference what people are doing and encourage people to do more. I'm hopeful that we will have that sort of outcome, if not here, well, very soon.